Hello, this is Japanese Economic Review Channel. Today we're jumping right into the latest trade statistics for January 2026, just released by the Ministry of Finance. And let me tell you, these numbers paint a really fascinating picture. On one hand, Japan's exports are absolutely soaring, but on the other, the country has slipped back into a trade deficit. So let's dig into the data and figure out what's really going on.
And right out of the gate, the headline number is a big one. Exports surged a massive 16.8% compared to the same time last year. Now, this isn't just some random one-month spike. Nope, this is the fifth straight month that exports have grown. It's a really powerful start to the year. But believe me, that's only half the story. Because, and this is the crazy part, even with that incredible export boom, Japan actually spent more money on imports than it brought in from everything it sold to other countries. That situation, as you know, is called a trade deficit. And what's surprising is that after a couple of good months in surplus, Japan is suddenly back in the red.
So here's the central puzzle of this month's report. You've got these incredibly strong exports growing for 5 months in a row, which is fantastic news. But at the exact same time, the overall trade balance has swung back into deficit for the first time in 3 months. How can both of these things possibly be true?
This really brings us to the core question we need to answer today. If exports are doing so well, how did Japan end up with a trade deficit of more than 1.1 trillion yen? To solve this, we really need to break down both sides of the trade equation. Let's start with the good stuff, the exports themselves.
All right, let's kick things off with the good news, this export boom. We're going to unpack what's fueling this impressive 16.8% surge. What is Japan selling that the rest of the world just can't get enough of right now?
Well, it turns out the world is hungry for Japan's high-value, high-demand goods. The biggest drivers here are things like semiconductors and other electronics, followed by non-ferrous metals and plastics. This is a huge signal that global demand in the tech and heavy manufacturing sectors is really strong at the moment.
And when you look at the numbers, the scale of this growth is just wild. I mean, check out semiconductors and electronics, up nearly 40% from last year. That's staggering. To put it in perspective, that single category was responsible for 2.2 percentage points of the entire 16.8% growth. It just shows you where Japan's real export muscle is right now.
Okay, so you're probably thinking, if exports are that strong, the deficit must be because import costs went through the roof, right? Well, this is where our puzzle gets even more interesting. It's actually the opposite. Overall imports went down by 2.5%. The plot thickens, doesn't it?
The biggest reason for this drop is something a lot of us have been feeling in our wallets: lower energy costs. The prices Japan had to pay for things like liquefied natural gas, crude oil, and other petroleum products were all down quite a bit compared to a year ago. It's all part of a bigger shift happening in the global energy markets.
And you can really see the impact right here. The cost of petroleum products alone dropped by over 25%. When you add it all up, these cheaper energy costs really helped pull the total import bill down. So, wait a minute. Exports are booming, and import costs are cooling off. So where on earth is that 1.1 trillion yen deficit coming from? The answer, it turns out, isn't in what Japan is trading, but who it's trading with.
Yeah, see, you can't just look at one big number. Trade is really this complex web of individual relationships. So let's break down the data and look at Japan's key partners, because each one tells a very different story. First up, the United States. Japan is still running a very healthy trade surplus here, earning 370 billion yen more than it's spent. But if you look a little closer, you'll see exports to the US actually dipped a bit, and that surplus is down about 23% from last year. It might be a sign that things are cooling off just a little in that relationship. Now, let's head over to the European Union, where it's a completely different picture. Exports were on fire, jumping almost 30%. But even with that incredible performance, Japan still ran a 200 billion yen deficit with the EU. And get this, it's been that way for 24 months straight, 2 full years.
And now for the big one, Asia. This is where the lion's share of Japan's trade happens. And we see a familiar story, a massive export surge of over 25%. But even that wasn't quite enough to stop a return to a small trade deficit of about 100 billion yen. That's a pretty dramatic turnaround from the surplus we saw last year.
And by drilling down into Asia, we finally have the key that solves our puzzle: China. Exports to China were booming, up an incredible 32%. But, and it's a huge but, the value of imports from China was just immense. We're talking 2.63 trillion yen. This created a massive trade deficit of nearly 1.1 trillion yen with China alone.
This chart just puts everything into perfect perspective. You see that nice surplus with the United States on the left? Well, it is completely dwarfed by the massive deficit with China on the right. And there's the solution to our puzzle. The sheer size of the deficit with its single largest trading partner was more than enough to pull Japan's entire trade balance into the red, despite all that other good news.
Okay, we've looked at exports, imports, and all the key partners. So let's pull all these different threads together and figure out what's the bottom line here. What does all this data really mean?
So here are the key takeaways. First, Japan's export engine, especially for high-tech goods, is firing on all cylinders. Second, cheaper energy prices definitely helped keep the import bill from being even higher. But third, and this is the most important part, the trade story is split in two. Japan runs a solid surplus with the US, but it has a massive, persistent deficit with China. And in the end, that one huge deficit was enough to drag the whole country back into the red.
This leaves us with the big question for 2026, doesn't it? As global demand for technology keeps rising, will Japan's powerful export engine eventually become strong enough to overcome its massive import costs? Or is this kind of trade deficit going to be the new normal? That's going to be the key dynamic to watch for the rest of the year. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.